Rivian Automotive just dropped its Q3 25 results, and they've got people talking again. The numbers show a company that's still early in its journey, but starting to show some real signs of maturity. Rivian reported about $1.58 billion in total revenue for the quarter, which is up roughly 78% year over year. That's a big deal for a company still fighting to prove it can scale profitably. The automotive side of the business brought in around $1.14 billion, up close to 50%, and their software and services segment jumped massively to about $416 million, which is more than 3 times higher than last year. That spike in software and services revenue really stands out because it shows Rivian is evolving beyond just making vehicles. It's starting to position itself more like a tech and mobility platform. For the first time, Rivian actually posted a consolidated gross profit of about $24 million. Now, the automotive division itself still had a gross loss of about $130 million, so it's not completely out of the woods, but the progress toward profitability is there. Production and deliveries also hit new highs. They built around 10,720 vehicles and delivered about 13,200, the highest delivery quarter so far. That's solid growth, especially given the challenges the EV industry is facing right now. Rivian also reaffirmed its guidance for the year, expecting somewhere between 41 and 43,500 deliveries for 2025. That's an encouraging sign that management feels confident about execution, even as some incentives for EV buyers are starting to roll off. The company is gearing up for its next big move, the R2 midsize SUV. It's expected to launch in the first half of 2026, and the production groundwork is already happening. Rivian's factory in Illinois is getting an upgraded paint shop that will eventually allow capacity for over 200,000 vehicles a year, and they're still planning their new plant in Georgia for future expansion. There's also a lot of behind-the-scenes progress happening on the tech side. Rivian's been pushing its software-defined vehicle architecture and autonomy systems, and that's becoming a bigger part of its story. They're not just trying to sell trucks and SUVs anymore, they're trying to build a long-term software and data platform that can drive recurring revenue, something that Tesla and others have proven can be incredibly profitable once scale hits. But it's not all good news. Some of Rivian's strong Q3 numbers likely came from a rush of buyers trying to get vehicles before certain US EV tax credits expired. That could mean demand in Q4 slows down a bit as that incentive wave fades. The company also still faces high fixed costs, meaning it needs to keep growing deliveries to spread those costs over more vehicles. And then there's the broader challenge in the EV market right now. Consumer demand is starting to cool off as inflation stays sticky and financing costs remain high. EV competition is heating up too. Everyone from Tesla and Ford to new Chinese automakers are fighting for the same space. Rivian has to prove that it can keep its niche strong while gradually improving profitability. Looking at fundamentals, the big positives are that revenue is growing fast, software and services are taking off, and the company has finally hit a small gross profit. But it's still burning cash, and scaling remains expensive. The road to sustained profitability depends on unit economics. That means reducing the cost to make each vehicle while maintaining pricing power. If Rivian can continue to improve those margins, especially with the new R2 SUV expected to be produced at lower cost, the long-term story starts to look more sustainable. Investors should also keep an eye on how much software and services contribute to total revenue, because that segment could eventually help offset the lower margins from vehicle production. On the technical side, the stock has been volatile, no surprise there. Traders are watching whether the price can break above its longer-term resistance levels, especially the 200-day moving average. If Rivian's stock starts building momentum above that line, it could trigger more bullish sentiment. But if it drops below key support, that might signal investors losing patience again. Volume spikes around earnings and major delivery updates are important to watch too. When Rivian announces milestones, you want to see high trading volume confirming investor interest. Low volume moves can fade quickly, especially in a volatile sector like EVs. In terms of overall market structure, Rivian stock tends to follow broader EV sentiment. When EV peers like Tesla or Lucid move sharply, Rivian often follows. If Rivian can start outperforming that group, for example, by improving profitability or launching the R2 successfully, that could signal that it's starting to stand on its own fundamentals rather than riding the sector's coattails. Let's break this down from a strategic perspective. Rivian's strengths include its strong brand in adventure-style electric vehicles, fast-growing software business, and solid delivery growth. It also has a great reputation for quality and design. Their R1T truck and R1S SUV consistently get strong reviews. The company's leadership team has been disciplined about scaling. They're not chasing hypergrowth at the expense of quality. Weaknesses are clear though. Profitability is still not consistent. The cost structure is heavy, and Rivian's production scale is still small compared to the likes of Tesla or Ford. Any production hiccups or supply chain issues can hurt margins fast. Opportunities are significant. The upcoming R2 SUV could open the door to a much larger segment of buyers. Think smaller, more affordable, and higher volume. Plus, Rivian's partnership ecosystem, including its commercial vehicle programs and work on autonomy, could become new revenue streams. Threats are also growing. The EV tax incentive pullback could hit short-term demand. Rising competition in the EV market means price pressure could increase. And the macro environment, high interest rates and cautious consumer spending, could make the next few quarters choppy. Now, if we step back and look at the bigger investment picture, Rivian is a classic high-risk, high-reward growth story. It's not a safe or defensive stock, but it has a lot of potential if it can continue moving in the right direction. The small gross profit this quarter might not seem like much, but it's an important psychological and operational milestone. It shows the company is learning how to scale more efficiently. For long-term investors who believe in the EV future and Rivian's ability to carve out its own niche, this could be an interesting speculative buy. I'd call it a cautious buy or a position-building stock, meaning it's one to accumulate slowly over time rather than jumping in all at once. Keep an eye on a few key metrics moving forward: vehicle delivery growth, automotive gross margin improvement, software and services expansion, cash burn rate, and updates on the R2 program. If those trends continue moving positively, Rivian could be in a much stronger position a year or two from now. But remember, if demand softens too much or the company hits production delays, the stock could easily face more volatility. This is not a set-and-forget type of investment. It requires monitoring and patience. So to sum it all up, Rivian's Q3 results show progress, confidence, and a glimpse of profitability. The company is still climbing the mountain, but for the first time, investors can see the peak in sight. Whether it actually gets there will depend on execution, market demand, and how fast the industry shifts from hype to sustainable profit. Rivian isn't there yet, but it's getting closer. And for investors who can handle the bumps along the road, it might just be worth the ride.